Drill it down to individual stocks. Siddhartha Khemka, the head of retail research at Motilal Oswal, is with us. Siddhartha, morning. The first stock I wanted to get your view is on Clean Science. It's one of these recent listings and it's done well. So the stock is currently closer to the 1500 mark versus an issue price of 900 rupees. So it's already had a fair amount of upside. Recently, you all initiated coverage on this with a buy rating. Can you tell us why you like it at these levels?
Yeah, very good morning, Reema, to you and to all the viewers. We recently covered the entire specialty chemicals space as well in a sector update that we came out with, and post the recent listing of Clean Science, we believe it's another good, interesting company from the specialty chemical space. Yes, this stock has already moved up from the IPO price, but if you see on the listing day itself, the stock was close. It had a huge demand and stock was trading much higher. From there, it has come down. So what's interesting is that it is Clean Science is a global leader in a lot of its niche products, and its focus on you can say the green chemicals, which is picking up a lot of demand globally, and it is mainly on back of its key strength in the R&D, that it is able to produce a lot of these clean and green chemicals, which is helping it. Another important factor is that if you look at most of the specialty chemical companies, they face competition from China. And here is one company which actually looks at China as an opportunity, and it provides a lot of raw materials for some of these Chinese companies. And if you look at FY21, almost 37% of its revenue or business came from the China market. So that is something different, and that is something that we like. The company has developed a lot of these novel manufacturing technology based on green chemistry, as I already said, which is a key focus area, as we know that the ESG theme is picking up globally, and this is one of the best plays that we find in that space. And if you look at the numbers, very strong growth. If you look at margins, significant improvement in the last couple of years, in excess of 50%. If you look at the broader return ratios are in excess of 30%. And if you look at return ROIC, that is in excess of 70%. So we believe that given the niche presence, high growth, high return ratios, the company should do well, and hence we like this company in the specialty chemical space.
Siddharth, hi, good morning. So you like Clean Science. Just a quick question though. If you can compare these two listed entities as well, right? I mean, you can look at Deepak Nitrite, SRF, etc., right? I mean, similar businesses, much larger. Profits are, 10 to 20 times larger. But valuations are about 1/3 of what Clean Science is trading at, again, broadly. Why not look at, existing older businesses, much larger in scale, leadership position, and much cheaper valuations?
Yeah, Prashant, very good morning. So you rightly said, and as I said in the beginning, that we looked at the entire specialty chemical space, and we covered it in a detailed sector update. So our preferred pick within the entire specialty chemical space is Deepak Nitrite, which is our top pick within that space. But I wanted to highlight Clean Science, which is a recent initiation, and hence touched upon that stock. Deepak Nitrite is something that the market already knows about and has been well tracked. Valuations are comfortable compared to Clean Science. But if you look at the overall space in the specialty chemical basket, I think valuations are in the similar range. If you look at some of the other players, for example, you have alkylamines, which trade at even much higher valuation. You have SRF and Naveen Fluorine, which trades at similar valuation. So again, going back, we like the entire specialty chemical space, and Deepak Nitrite is our preferred bet. We also like some of the other players in the space, for example, Galaxy Surfactants, Nosil, which is another small player and a niche player in that segment. And here comes a Clean Science, which is a kind of a niche play on the ESG theme, and hence that that mention or that special discussion on that stock.
Okay, that's about Clean Science as well as Deepak Nitrites. Deepak Nitrites is up 150% since the start of the year. What a run it's had. You also like JK Cement, Siddharth. Can you tell us why you prefer it over the others?
So, Reema, if you look at the entire capex cycle, we believe that that is something which is picking up pace. And if you look at the government spending, that has been pretty focused on the infrastructure side, especially in the current environment where government is focused on spending and improving and boosting the economy. So that is one space where the consistent focus has been. We have seen quarter after quarter, the results for cement players have been pretty robust. Volume growth has been picking up despite being a monsoon season. We have seen the volume growth pretty steady. The realizations have been pretty steady. Volume growth has been pretty good. And within that space, we like JK Cement. The company is expanding capacity in the north and another capacity, another 4 million ton capacity in the central India. So we believe that with the capex, the company will have a strong market share in the north and central regions, which are the most attractive regions for the cement players right now in India. Plus, we have a good mix of grey cement as well as the white cement and putty, which are higher profitability in terms of EBITDA margins. So we believe that the company is likely to deliver industry above volume growth of 12% over the next 2 years on back of the expansion. And hence, we like the overall cement space. In the large cap, Ultratech is definitely the preferred player. But here again, a preferred play for cement in the mid cap space is JK Cement.
Siddharth, it's great speaking with you. Thank you very much for joining us and running us through what you like. I mean, there's one more name, L&T, but we're out of time. We'll pick that up later. Thank you very much for your time here. We'll take a very quick commercial break, but